All right, so new video for the week, end of the week. Um, Bitcoin's been rough. Like I said, our moving averages had us out. Weeks ago, we had a dip in the price. What was that? Wednesday, and I think it was like Wednesday. So here we bounced on the 25th, went up, hit the 30 MA on the daily, and I had said that it was something to note that we really need to get above that. We made an attempt here, didn't do it. We made an attempt here. The wick didn't even wick above it, and it failed. And then we had today, and then also yesterday, and even the day before that. So basically, the past 3 days have been pretty rough days for Bitcoin. So any other asset, the mining companies, alts themselves were doing really bad. But what I kind of wanted to note as well was that whenever price fell, so we have this lower level, and we're above it right now. So this Fibonacci level, right, the halfway mark, that's 31,590, and this is about an estimate because, with Fibonacci's you can go the up, you can use the wicks, you cannot use the wicks. Let me hide this real quick. Let me hide this real quick too. So I can draw these. There's like some fudge factor in there, right? I think this one's locked. Oh, it isn't, but I'll just draw a new one because I don't want to. So right now, this Fibonacci level is at 31,590, and that's support. But what we've seen here in the past couple, basically the past month, whenever we initially wicked, we found support, and that support level was basically 34,000. Right about there. Yeah, about 34,000. So every time we've wicked, we've had enough time to come back up and find support. Now we haven't done that now. And then we're also below the 2-week low, right? So the 2-week low was 32, 111 about. So just say 32.1. Okay. Now we are finding support here. We did have a bounce here in the CMF, and then also on the daily, you can see as price has been trending down, we've had this bullish divergence. You can kind of say price was flat as well, but this would be bullish divergence, which is bullish, right? Even so, we didn't initially have it on as price was going down. Say, so what day was it? The day. Let's use the 14th. So on the 14th, kind of right here, right? I remember watching this and saying this is going to fall because what we had price going up, but then CMF, you can see the CMF right here. So this is bearish divergence. So the CMF started to trend down. Even, let's not use, yeah, we can use this one. So all the way to here, let me expand this out so you can kind of see it. We had the CMF trending down even up to here. So this would have been an indication, right? So look at that. Look how extreme that is. And then we had price, if I go start going up. So that's bearish divergence on price action and the CMF, meaning that there's more net sellers than there was buyers. And the thing about it was, I'm looking at this. Where am I looking at it? So it happened here as well. So price was flat here, right? Here's another good example. So I can hide this one. I'll just redraw it. So price was flat, but then we had CMF here. More so, was it? Oh, so that was trending up, but you have flat price. That's bearish. That's bearish price action. You couldn't even, so we had even more so here. So this one, I think I showed this one last time, where you had kind of right there. I would use this one right here, where you had the CMF was going down and then you had flat price. If we could have gotten a green number above a prior green number high and then above this 9, we probably could have built some momentum and gone higher. But really here was like is a perfect example of, and this was at, so this was late in this was the start of the new day pretty much. This would have been even here like midday, and that you already started getting divergence in the CMF, and then here was really steep. Even though price was going up, we got it still was trending down. So that's net sellers. So you can see that right here. That's a signal to sell, and we can even look. Let's look at the funding rates, because I think the funding rates started going positive. Yeah, so it started. He had this one here. I think it was even more prominent on the hourly. Yeah, right here. So you had the same thing on the hourly here, and here. So again, net selling, prices going up, but then the market started to get net long on a short time frame. That's usually not good. So that's two indicators there telling you it wasn't as extreme on the 4-hour, but it was on the hourly. And then I also think, let's see, we can look at the on balance volume. That probably should have started trending down as well. Let's see. There we go. On balance volume also, that's just trending up with the trend. So we did have an increase in volume, but then it did start dropping off here. So that wouldn't have helped us. We can look at hash ribbons, wouldn't have helped us. On balance volume, our RSI, we can pull that up real quick. I mean, that was just trending with price. There isn't anything really other than the CMF that was showing us that it was likely to have a bearish move. I mean, we can look at the triple MA. That didn't show us anything. We had moved above the hourly, would have got us out, but on the 4-hour for sure, that was bearish. But so we couldn't rally above that. That showed us bearish action. So now, I mean, we had this nice upwick candle. So we did have earlier in the week, what was it, Wednesday? CPI numbers came out. They were higher than expected. Year over year, CPI was 5.9. Initially, the market sold off a little bit. And then what we had was the bond rates had dropped, right? So usually if the CPI is higher, your interest rates should go up, your yields for that. Those went up initially on that news, but then they went down. They went back down. So the market basically absorbed the high CPI numbers. And then you saw gold and silver starting to make a move. And basically what we had here, I'm pretty sure it was Wednesday, because we had the 14th. Those numbers came out. Yeah, it was Wednesday. So you had a bounce here, and even in Bitcoin, like everything started to bounce like hard money, right? Like things that are supposed to help you, kind of preserve your wealth in high inflation times, because that's the narrative behind Bitcoin. It started to show a reversal candle, but then it just failed. Like there was no follow through here. We still have our funding rates going negative. They can go negative for a while. Weekly, it's not as extreme, but they're still negative. We're out of this. We're just sitting patiently. We're waiting. This could be an accumulation bottom, even though this is very bearish as far as us closing. Now, if we can get, we have 2 days, but if we can get price movement above 32.1, which isn't that much of a move, but if we can get some good momentum, we definitely need to close above this Fibonacci. Let me redraw this, like I said, because you can draw it a couple ways, and there's a little bit of fudge in there. So if I draw it here, like off of this wick, and then I go here, our support level is really like 34, and that's if I use the March. But I can also use this, the low back in December 2018, because I think that's how my other Fibonacci was drawn. And again, that's still like 34. And I usually don't use the wicks because that shows a lot of, I think the wicks are there's some emotional aspect to it. But now that I'm looking at this, maybe I had highlighted earlier that 34 looked like a lot of support. It obviously was for almost the past month, but now we're below that. And look where this Fibonacci is whenever I include the wicks. It's right at 34. So this could indicate a failure, in us holding price, since we're below the 2-week low. Our moving averages are still trending down. This one's starting to maybe flatten out. that our next level of support's like, just say 26. And then yeah, so like 26 to 24,000, we could get, that could be, the dip. That could be the ultimate dip buy if price doesn't hold here. And oddly enough, I believe that's the price where MicroStrategies actually announced that they had entered the market and made a relatively large purchase, was right around this 24,000 area. So that could be, the retest area, and then we go up. But, our indicator said we were in a bear market essentially all the way back, here, right here, back in May 24th. I'd said that multiple times. So we'll see. I know the mining, like I said earlier, the mining companies took a hit. That China crackdown was that was a big deal. Mining hash rate's starting to come back online. We can bring that up real quick. Yeah, you can see that here. The 7-day moving average is starting to come back up. We can look at the raw values. Raw values, looks like we took a little bit of a dip. So here, so almost like, so we have a high, a higher high, a lower, a higher low, higher high, a higher low. So that this trend is trending pretty good. I wish I had one that was better. You can just look at Bitcoin hash rate. There is a better chart. There it is. This one. This one's, I think, a little bit more in real time. Go to year to date. This one's on the 15th. So this is from yesterday. It looks like we've trended down a little bit. So I guess this will have new numbers, but for the most part, we're starting to, recover. And I said we need a recovery in hash rate in order for price to, let's look at our hash ribbons. For price, I think, to start recovering. These are based on the daily, still wide. We can look at, the premium. I'm not worried about the premium. Not worried about the Pi cycle anymore. But if I'm looking at this, like I said, I'm out. I'm looking for some support. Let me bring up my Fibonacci again. There it is. So if I go off of the Fibonacci based off of the closing candles on the weekly, we are at an area of support, even though there's a little bit more bearish indication. We did come back and retest this level, this 9. I said I'm always worried about whenever we don't get it. This was a good pull. We had what? This was almost 10% in 2 days where we regained. We basically erased this drop, but then we had, it failed 2 days later. And then now 3 days later, we continued the downward trend. But we came back here, and for this to turn into a green 1, we would have to find a price rally. The day's almost over. Within the next 30 minutes, that would get us all the way back above 33.1, basically. That's probably not going to happen. So what we're looking for here is we're looking for what's going to happen the next couple of days. So Saturday, Sunday, I would like to get a close above that 31,590. If we can get back above 34 in the next 2 days, so that would be. So this would be Saturday, Sunday. So this day right here, this would have to for it to close the week out, and then we get the start of the new week. We would have to get, in order for it to be a green number, we'd have to get all the way back above 32,816. Not quite 34. It would be nicer if we got to 34, but 32,816, that'd be, another $1,300 move from here. Let's see where we're at. Right here. So about a 4% move. We need a 4% move in 2 days. Not unimaginable. Let's see how probable that is, though. We're getting bullish divergence there. I'm going to pull up the CMF. I'm not worried about my moving averages right now. So that's good on the daily. On the 4-hour, let me hide this real quick. I don't need that right now. I mean, this is downward movement. You can see here, this is flat. This would almost be like a, I mean, you can almost draw this as a descending triangle, right? And then you can get a break. You would get a break in price. I would draw it probably here, right there. We went a little bit below it, but just, let's see, just for the purpose of this, right here. Do I have a good angle? This would have to be drawn out a little bit farther. And I'm on the 4 hour on this. Let's see what it looks like on the hourly. It's a little bit more extreme on the hourly, but it's probably a little bit cleaner. And we have 3 touches right here, so that's even better. So there's a little mini descending triangle here. I would draw this out. We're right at the base of it. Here. And then I'm going to draw this part, which would probably be a little bit. Oh, right there. Yeah, that's good. Close enough. Let me fix this. No, I didn't want to delete that one. I want to delete this one. And then I'll draw my line from here down. And then this will, so if this breaks, which we're pretty much there, but if this breaks, we have a price target of 26,000, which would line up better with the other Fibonacci that I drew that said that there was support there. Let me unlock this for a second. Yep, right there. So that pretty much puts our target there. So if I were to say anything, I say that we closed below this week. We're using this Fibonacci. We're below this 34 that gave us so much support for so long. Even though our CMF is going up, that can trend up. Our RSI, that can trend up for a while, right? So our RSI on the daily, because we drew this on the daily, this will most likely be, this will still trend up. I don't think it'll go, you know, where are we at, 38? So this would probably not get below 22 again. It could maybe get to like 30, but that would still be bullish divergence. Now, what if I draw a line like this? That's kind of where we're at here, and this is where we're at. We're pretty much at support already. It looks like we broke it. But this can still give us bullish divergence, and it wouldn't be as extreme. Maybe it would be like right there. And then this one here would be like maybe right around there. Right, but it would still give us a bullish divergence movement, even if we got to sell off all the way down to 26, like 20, mid 26, 26.5. That would be, you know, we could, and I mean, we could even sell off and we could wick down to these lower levels, which would give us what we need to backtest those areas and then possibly produce green numbers, because that's what we're looking for whenever these areas get retested. Right, so this number is getting pulled from, oh, I turned off my TD sequential. This number is getting pulled all the way back from December 2020. So yeah, we could wick there. Oh, actually, this is looking for red numbers. So all I need is a red number to wick there, retest it, and then bounce. Same thing on this 4 hour, which is coming back all the way from December as well. It was Christmas, basically. Yeah, it was Christmas Day. So Christmas Day, we need a red number to retest this area, bounce, and then we would have a retest of that. So basically, prices where they were at the beginning of the year. Let me go to the monthly. And we've already had the retest on the monthly, right? So we had a 9 extended, came back, retest. We could come back and wick a little bit lower to this lower bound, and then maybe we get some good movement. Could we come back and retest the previous all-time high? It could, but I would say that that's much, much less a probability as for right now. But for right now, if I had to lean towards anything, I would say still not in this market. We're going to test, 26 area. That would be my prediction for the next week or two, would be that we're going to get a close below this 9, and that's a red number below a prior red number below the 9. And just like we look for that on the upside, like we had here, right? This is technically a green number above a prior green number above the 9. You would look for more downside. And then where's your major support? Here. That's your next area of support. So that's what I would have to say. I'm cautious, not in it, expecting lower prices, but we could get a bounce here. That CMF is still trending up, but it's more likely that we get a retest of the mid 20,000s than we find support here and we go higher. But it could be possible. All what happens in the next couple of days, if this can hold, because we are still a 9 and we have a 4. If this 4 closes below this 3, we have a green number below a prior green number below a 9, which is bearish. So, but we need to find support here. We need to have some good support, some good CMF, which we are. It's trending up, but we really need to get up. We need to get above these levels. Funding rates stayed negative. They haven't gone positive. Bollinger Bands, we're right at the lower bound. Like I said the end of this month, I think would give us directionality. We would have an answer. And right now our directionality is down. So I would officially say that we entered a bear market, back in here. Back in May, that was the start. I mean, I wasn't going to say the bear market was here, started here, but we got, based on the way I trade, confirmation that was here. And then we failed and we've gone lower, and it looks like this mid 20,000s would be our initial support area. And if that would fail, 20,000, and then anything below that would be uncharacteristic of the market. We really need the hash rate to recover. But hey, I mean, that's how bottoms form. They come here, they can come down. It needs to consolidate. We consolidated here for months. We consolidated here for a couple of weeks, and then we initially, we recovered. It was like a month and a half, or 2 months, like 2.5 months, and then we went higher. Where this one was much longer. The consolidation back in 2019. So we're looking at, essentially 5 months to recover. So I did say, I mean, if we were, we can still recover before the end of the year. I mean, I said that we would, whenever we initially fell, I thought that we would recover by August, September, maybe between August and October. Still possible. This China crackdown was so uncharacteristic. We've retested on the longer time frames. Buyers are supporting the price. Retail has pretty much gotten out and lost interest. That's usually a good sign that we're close to a bottom. But us wicking going a little bit lower, I mean, I say a little bit lower, it would be, this is another 20% drop. And this would be characteristic. I think it would be characteristic of the initial, the drops that we've seen in Bitcoin before, where, okay, this is a little bit, not as much, so 60%. And start at the beginning of the cycle, I said, hey, maybe this cycle isn't as bad. Maybe we get 60, somewhere around 60% drops rather than around 75 to 80% drops. And this would be in that 60 area if we found support here. Even here would, it's still above that 75, 80, but this could be an outlier in Bitcoin's price action, because data that held up for the last 10 years just it's not holding. Like Mayer multiple, stock to flow would be broken. Like it just, this is so close to being, I would say it would be broken, and then we would go down, and then maybe sometime next year. Like it still has all this time to catch up, right? Until the next halving, which is in 2024. Like it could do it in 2023, where it comes back to the stock to flow, but the separation in stock to flow price and where actual price is, it's the biggest I think it's ever been. Mayer multiple bands, we didn't get, to the high like we did in previous cycles. We basically stalled out on this bullish extension area, and then but this is still climbing. This is still climbing. The lower bound here on this oversold area is exactly where I kind of said, the mid 24,000s. And if it takes us 2 or 3 weeks to get there, this could be back. This could be in the $25 to $26 area by that time, and this would be basically, it's oversold. So it's buy the dip. Where does this relate to in our realized price? So our realized price is right around 19,000. This already started to curve down. Our absolute, we're so far below the NVT, but there's a 14. It's the 200-week moving average. It's the 1458 on the daily. So let's look at 50. Let's look at, I'll pull up the 200, and then let's pull up the 128. Let's look at these real quick. So dailies, yeah, we failed basically the 50. 128 was not really support. I mean, it kind of was, but not really. 200 is just torn down. So we're at the 50. I think initially in bull cycles, we've had bounces. Once we've got to the 50, yeah, like right here, there was a bounce. How much is this bounce? 40%. That would get us like to the 40 areas. Could we see that here? Is it possible? Possible. Like I said, that would get us back to the 40s. I think people would say, "Oh, we're back in business." That would, but I would still be cautious of that. So yeah, the 200-week moving average is at 13,840. That would be like an absolute bottom. That doesn't really align with the mirror multiples because I said this happened so much earlier than, but I want to go to the 1458 here on the daily. And that is basically the 200-week moving average that's at 13,000. By the time it would get to this like lower fib level, but it would take a while at 16,000. I just don't see it going that low, even with all the bearishness that happens. Now, mid 20,000s, I think that's reasonable, but the price has been so, it's so bearish for the last month, basically. I just don't see it going much lower than that. I don't see us retesting the previous all-time highs. I don't. Right now, mid 20,000s, yeah. But I just don't see us retesting the previous all-time highs. I think once prices close the monthly above the previous all-time high, it's never gone and retested that previous all-time high. And we got a monthly close here. So I'm going to lean on that. I mean, there's a lot of historical data that's not holding up this cycle, and I think it's because this cycle is definitely different. It's definitely an outlier that could be helpful and useful in the future. So, I mean, you can even compare bull markets, and this is just like so uncharacteristic. If this was even close to where we would have been or could have been, like 74,000, 90,000, and then we would top sometime in, say, September, based off of the era before or the previous one before that, we'd be like 200,000, 800,000, maybe not a million. But this is just so uncharacteristic of this cycle. I mean, of the previous cycles. You can see it here. It's just so uncharacteristic. So, but we'll see. Oh, here's that simple moving average. Like I said, you can see it found support here, support here. Right now it would be 13,000. I don't see that happening. I don't see us going lower than the previous all-time high. So, in my perspective, we're pretty close to the bottom. Yeah, we could suffer another, 20% drop, but that would be like, it's like just back the truck up and buy it because it's just so oversold that you would, the bounce would be tremendous, and I think we would just fully recover by that time. I just don't see this lasting much longer, but we'll see. Get what price action gives us. So, but I spent a lot of time. I did say that CPI numbers came out, so gold had rallied and it looked great, but then it sold off today, basically. it had a day where it closed above the previous week high. It looked pretty good. Like I said, it sold off today right here, but we did hit a 9. So like I said, this did warrant a entry, but I usually don't enter a trade even if the moving averages look great. I usually don't buy on the 9. I don't go fully in on the 9. I did go in just like a 50%, 15% allocation as to what I was going to allocate to, gold or silver. But this pullback was actually expected. And if we would have got a close below 1805.75, which I think we went, let's see. Yeah, 1805.75. I thought we got that low today, but I guess we didn't. Not quite. So we could see some consolidation. I'm looking for some reason, TradingView doesn't provide the CMF. It won't plot it on the hourly, but it does it on the 4 hour. So this is just trending up with price, but our CMF's pretty much staying. I wish we would have found support here. We're on a 7. What's our RSI doing? RSI looks okay. On the daily, I think it was a little bit, yeah, it kind of failed. But we could find support here. It could sell back, but I'm looking for consolidation. I'll look at GLD because that's the index. So it hit a 9. Here we go. So this looks good. So this is providing it. We're seeing CMF trend up. I think our on-balance volume is also trending up. I'm not going to look at the RSI. Let's bring up on-balance volume. OBV is trending up. That's good. I mean, this was trending up with price. Let's look at the weekly. Here we go. So this looks really good. So if I look at GLD on the weekly, as yeah, we got a bounce. Price started, we started getting bullish divergence here. We hit the 9. We bounced. We hit a 9. There's going to be a lot of support right here between this area of 161 and 156 if we do start to fail. But what we're seeing CMF rise, on balance volume rise. We're heading towards this 9. This would indicate breakout, and then our next level would be 1900. With gold, how does that relate to gold? Our CMF's not coming up, and our unbalanced volume is not doing. But if we say that they're analogous, which they kind of are, the GLD is made to track gold, are similar. It would say that we're going to get, so it would be 1900 then 2000. That's basically the two levels on GLD, but in relation to where it would be on gold, if I can show that CMF and on balance volume, it would be here. So this is actually good. Even though we did have a sell-off, we'll see how it goes. I can look at silver. Silver has stayed within that trading band. It consolidated. Let's look at, will it pull up the CMF here? No, I think it does it on the daily though. Nope, doesn't do it on the daily. Why do they not provide? They provide it on the 4 hour. So we're kind of in a little channel right here. We did kind of close right at it. But silver's been in this channel. And I actually took the allocation that I put. It was actually in, I took a position in silver. Using gold as like, not necessarily a proxy, but to compare where, what I want to, do I want to enter? Yeah, gold's rallying. I think silver's still going to outperform it whenever this thing really starts to move. So we'll see. Like I said, it's only a 15% allocation, basically just kind of dipping my toes in a little bit to see where we're at, because we could be recovering here and then going higher. So I think that's about it. Overall, the stock market's been flat. It hit higher highs overall, S&P and NASDAQ and stuff, but the stocks in them, a few have been going higher, but it's been pretty much sideways to negative. So if you've been in individual equities or stocks, you've been probably just breaking even, unless you were lucky enough to, select the ones that maybe had a little bit of upside. But overall, your blue chips were just basically sideways to negative. So we'll see how that. I'm talking about it. Let's pull that up. So we hit a 6. It's not much of a sell-off. I think the daily was on a 9. We hit the 9. All right, so we hit the 9, retested. We'll see if we can get a bounce here. I'll bring up SPY because that's the trust. Hit the 9. We can look at CMF and we can look at RSI. Oh. And it's kind of trended up with, I mean, we were over, that's bearish divergence here as prices going higher. So that was expected since we had the 9. We've gone a little bit lower, but even if this starts to collapse down, we're going to have support right here. Let me go back to SPX. Yeah, we're going to have support right here, right around 42. How much more of a drop is that? I mean, from all highs, we're only down 1%, but this would be 3%. I mean, I think people would feel like it's end of, oh my God, end of the world. But did we retest this area here? We did not, so we could come back here, find support, and then go higher. Our RSI did crash down, so we'd have to watch that. So sideways action, again, still in equities, to maybe small returns is what's expected, I think, for the next couple of weeks. I think until the summer ends and, we get to the later half of the year. And oil was looking good, and then that collapsed down, which I was expecting, again, because we had T to sequential 9. We went above it. This was a reversal candle. This was trending down, bearish divergence. Sometimes it's just that simple, man. I mean, we're here, indicator trending down, and price goes up. That's bearish divergence. We came back to the 9. So again, I don't think there's CMF data on this. Oh, there is. Good. So again, here, bearish divergence. CMF hasn't quite failed, but we're in the area of the last 9. So what we're looking for is support, and there's another 9 right here. So we could go down next week. I think we will. This was a little bit of a reversal candle. We did have some CMF go positive, but I think we can go here. We can retest this area, find support, and then go higher. And that would line us up, to this 9, because I think if we went down and then we closed above 74, that would get us a green one to restart the count, and then maybe the next week. So maybe the next 2 to 4 weeks we get some consolidation, and then we get more clarity as to, I say consolidation. We could still fall 2%. So plus or minus, say 3%, we could get as a consolidation field, like area, and then we would get directionality as to, is this going to hold, or oil price is going to go down into the winter, or are we going to go up into the winter? And then, I mean, is there a seasonal trade here? Yeah, so it looks like seasonality. No, I don't know. I'm not going to say there's seasonality, because right here you got price dump into the winter, and here you had price rise, or kind of stay flat. So we could stay flat. This was an 8. This was a 9. Consolidation went up. Then we finally failed. But you could have seen it here as clear as day, because we had, again, bearish divergence. Our price was going up as our indicators were going down. Right there. So that was a signal that, hey, it's overbought. Well, no, not overbought. That price action is not aligning with our indicators, so we might need to get out. And then if I can, so that was there. This one, are we getting something similar? We kind of are. So price could go up maybe for another couple of weeks. We could get something like this high, and then go, and it looks like an attempted breakout, and then we go down, because we're getting that now. So our oil price is going to stay elevated. We'll see 2 to 4 weeks. We'll see where we're at. We could go higher with our indicators going lower, get bearish divergence, and then ultimately, they'll have maybe within the next, how long did this take to play out? This essentially took 10 months. We could get 10 months of upward to, kind of flat oil prices, and then we could finally sell off. So 2 to 4 weeks would give us August, and then 10 months from that would be October, November, December, January, February, March, April, May, June. So maybe next summer we would see a sell-off in oil prices. So, but that's just speculation because let me look at our moving averages here. And yeah, they close here. You would have got out some, and then finally you would have got out 100%, but would have gotten you out too late because you would have incurred probably 5 to say 12% loss. So you would have wanted to get out sooner. I can look at October 2018 and see what we had. Look at this, double nines. So 9, 9, and then sell off. So 9 consolidation, close below prior candle below a 9, more downward pressure. So where are we at on the daily here? We had a 9. We're retesting it. We didn't get back here in 2018, it was nice to pick a 9 and basically pick the top 9 top, and then we recovered. So could this be a 9? But we didn't go above it, right? So there wasn't an opportunity to really retest. Where here it's a little bit different. We had a 9 continuation retest. So, but we'll look out for it because we had a 9 here, consolidate, retest, and it went higher. 9, retested a couple of times, then we went higher. Same thing here, 9, retest, went a little bit lower. So we could see a 9 and then breakout. But we follow the price action, and then we determine where we want to be, if we're in an oil position. So this went extremely long, probably like an hour, but I'm glad I did it. I haven't been doing multiple videos in the week like I was before. No one wants to get bad news every day, especially if you're in Bitcoin or crypto or in the market. I mean, it's just been flat. It's been a pretty tough market unless you're short and you're trading that way. We'll see how much I enjoy doing this price analysis and stuff like that and sharing things. The viewership, I'm going to be honest, I have still only around 70 something subscribers, viewership. I did have some videos that went, a little bit higher, 60, 70 views, 50 views, but maybe because I haven't been as frequent, I've been getting like less than 10 views, but it is what it is. I started this kind of little experiment in November, and if it goes through the year and I don't really get more exposure, I'm kind of really just doing this for myself to kind of log it, and it's been a good learning experience. But I don't, maybe every now and then I'll do a video, but I'll maybe shift my focus into some other things rather than spending the time to do this. Because there's a lot of people that do TA, so some of the information you could be getting could be similar. Some of it could be, something you didn't get. It's just a different view, but we'll see how it goes in November. If I feel like it was a good year, and I'll just hang it up. But either way, if you're still watching, I appreciate it. So I'll end it on that note. But thanks for watching.